They asked me to shadow an AI robot doing my job. Just watch, they said. Document the process. Here's what happened. I spent 16 hours watching it do everything I do. Every decision, every adjustment, every judgment call I would have made. It didn't work like me. It worked like me on my best day. The day I never have twice. Loan approval officer. Shadowing the robot. 3:42 p.m. I watch the system light up. A loan application hits the queue. The cursor doesn't hesitate. No coffee break. No deep breath before opening the file. The robot starts immediately. When I did this job, I opened the file and forced myself to slow down. The clock screamed. I resisted. The robot has no clock to resist. It simply processes. The numbers load, income, credit score, debt ratios. The system confirms each threshold in milliseconds. Check, check, check. When I read these same fields, I read them twice, sometimes 3 times. Not because I missed anything, because slowing down revealed what speed concealed. The robot doesn't slow down. It accelerates through certainty. Then something shifts. The system pauses, not like I paused, but it pauses. Income qualifies, but the pattern recognition model activates. I watch it scan the pay stubs. Overtime. High 1 month. Low the next. I caught this the same way. Not from the total, from the volatility. I called it a gut feeling built from pattern memory. The robot calls it statistical deviation from stable income profiles. Different language. Same warning. Bank statements load. The balance looks clean, strong even. When I reviewed these, I scrolled slowly, looking for rhythm. Large deposits appeared. Same day, same amount. No source explanation. The robot sees it faster. Not because it scrolls better. Because it's comparing this file against 6,000 previous loans simultaneously. It recognizes the signature. Cash-heavy businesses that filed incomplete documentation. Elevated default correlation. 34% higher than baseline. I would have called the client here, asked questions, listened for confidence versus panic, measured the gap between explanation speed and explanation substance. The robot doesn't call. It calculates. The risk score adjusts. Not to auto-decline, to conditional approval. It requests additional documentation, the same forms I would have requested, the ones not required by standard policy. This is where we converge. I introduced friction on purpose because I learned that defaults hide in clean files. The robot introduces friction because its training data proved the same thing through repetition. I relied on years of mistakes I witnessed. The robot relied on thousands of quiet failures it absorbed. The approval pauses. When I paused a file, I worried about the client's reaction, about metrics, about my manager asking why I slowed a qualifying application. The robot doesn't worry. It simply outputs. Conditional approval pending income, stability, verification. The explanation is cleaner than mine ever were. More direct, less defensive. 3 months later, the loan doesn't default. Not because the robot caught something I would have missed, because it caught the same thing I learned to catch, but it caught it without fatigue, without pressure, without the 3:42 p.m. clock. I saw risk through experience. The robot saw risk through patterns. I learned from years on the job. It learned from thousands of quiet failures. When I watch it work, I'm not watching replacement. I'm watching my instincts, translated into math.